Hello, everyone. This is Muhammad Akif with Akif CPA, and today we'll be discussing US LLC for Canadians. Is it a good idea or a bad idea? This video is specifically for Canadians who are looking to invest into US, or Canadian businesses, Canadian corporations want to set up in the US, or somebody who's starting a new business in the US. US LLC comes up a lot. You will hear that I want to purchase a real estate, and then I'm using a LLC. I'm also a Canadian business. I want to set up when the Canadian business or wants to set up a US LLC for their subsidiary in the US. This could be someone who is trying to sell online, doing e-commerce, Amazon, Shopify, you name it, and wants to set up a LLC in the US to make that investment to start that business. So I normally come across the question: is it a good idea, or I've already done this? Where do I stand? How the taxes work? I do ask them, like, how did you get into this? But some of them are telling me my lawyer told me, or I'm in a Facebook group, I'm in some kind of other group in a forum that they were saying that the LCs are the best thing. And then, or somebody that, sometimes a Canadian talks to a US accountant, and the US accountant is telling you, yes, LLC can work for you. And then the LLC is the most common thing. So everyone is doing LLC on the US side. So we'll be discussing two big problems. So, when having a US LLC, of course, some solutions too. And then we'll get to a conclusion: is it a good idea or a bad idea? So let's get into the problems. So the number one problem that the Canadians will face when they own a US LLC is double taxation. This is one of the biggest areas. The tax treaty does not work. It doesn't, because the type of income that is being earned or generated on the US side is classified differently on the Canadian side, and the way the CRA looks at it. So I'll tell you how different this is and how the double taxation come into play. So let's say, for example, on so for we'll take an example in terms of $1,000. So how the LCs are taxed on the U.S. side. So LCs are considered a pass-through or flow-through entities on the U.S. side. And what do I mean by pass-through or flow-through entities? That means even though the LLC will be generating income, earning income, the LLC will not pay any tax. The owners of the LLC will pay tax on their own personal return. And then, so that's the reason this is called a pass-through or flow-through entity. That is on the U.S. side. So if you own 100% of the LLC, the LLC will not pay any tax. The tax will be paid by the person or the company that owns the LLC. How's it on the Canadian side? On the Canadian side, the CRA looks at the US LLC as a corporation. It is not considered a pass-through or flow-through entity as it is on the US side. So what kind of problem that happens? So let's say, for example, we'll take $1,000 you have earned that is the net profit that the LLC has earned on the US side. Because it is a pass-through or flow-through entity, the owners of the LLC will be paying tax on that 1,000. And then in this example, we'll add one more thing, where out of that $1,000 you take out $400. So $400 is being distributed to the owner of that LLC. So we have paid tax on that 1,000. The distribution that you have from that 1,000 is not taxed because it is flow through. So on the US side, once you have earned it, you pay tax on it. The distributions are considered non-taxable. Let's move to the Canadian side. So let's say if you were the owner of the US LLC, that 1,000, the tax that you have paid on 1,000 will not be considered that 1,000 will not be considered income the same way on the Canadian side. So the tax that you have paid on that 1,000 you cannot use it to offset any income. So the distribution that you have received will be considered a dividend. So that creates a mismatch of type of income that you have earned from a foreign corporation for Canadian tax purposes. So on the US side, this distribution is tax-free, but on the Canadian side, this is considered a dividend because the LCs are considered a corporation for tax purposes. So now you got to pay. You have already paid tax on that 1,000 that you have earned in the US. And now you got to pay additional tax on that distribution that you're taking back to Canada, which creates double taxation. Essentially, you're paying double tax on that same 1,000. You already paid tax on the US, and then you're paying tax on that on the Canadian side. That's number one problem. The number two problem is the tax treaty problem. So if you are managing the LLC from Canada, then this might be considered a branch on the Canadian side too. So the branch profit tax might kick in. So if everything is being managed for that LLC from Canadian sources from within Canada, then we do fall into that category, and then CRA might tax you for the branch profit tax for the income that you earn. So we have double taxation, and then we have branch profit tax on the Canadian side for the LLC that you own, or whereas on the US side it's considered a pass-through or flow-through entity, and there is no problem on it.